All signs are pointing down, but that's not necessarily a bad thing. We're going to talk about that today. I also have some information about the fastest growing housing markets in Arizona, which might be really interesting for you if you are an investor or maybe just considering buying a home in Arizona. So we'll get there in a moment. Let's talk about what is falling. First of all, mortgage rates are falling. But in addition to that, we are also seeing home sales falling. So falling mortgage rates have yet to improve home sales with buyers uncertain about NAR settlement and election. This is an article from Redfin. And of course, they're looking at this nationally. This isn't specific to Phoenix, but I do think that a lot of this is going on here in the Phoenix area as well. They're saying pending home sales fell 6.9% during the 4 weeks ending August 25th, which is the biggest annual decline in nearly a year. That's despite the median housing payment falling to its lowest level since February because we have seen an easing in mortgage rates. As of last week, I believe, the average rate on a 30-year mortgage is to 6.35%. I think that's the lowest we've seen since May of 2023, somewhere around there. So great news for buyers, but they're not doing anything, according to this article. And they're saying it's because there are some hesitations with buyers out there right now related to clarity on the NAR settlement, which I spoke about in my video last week. This is that any home buyers who want representation from a real estate agent do have to have a written agreement with them and may be obligated to pay them directly for their fee versus the seller compensating the buyer's agent as it previously used to work. So clarity on that. So there's some hesitation there. Lower home prices, even though monthly payments are declining, home sale prices are just a few $1,000s shy of early July's record high. So prices are still too high in the opinion of buyers. Lower mortgage rates, some are hoping that rates will fall lower. So it's that classic case of like, yes, it went down, but is it going to go down further? Maybe now is not the time. And then the outcome of the presidential election. And I talked about this quite a while back, but talking about the impact of national elections on the housing market. And what we tend to see is a lot of pausing leading up to the election. And then after that, a lot of the activity resumes. And we actually tend to see home prices going up after the election. So I will link that here if you want to watch that video and learn a little bit more about that. So this is saying I expect more buyers and sellers to jump into the market in a few months once everyone has a better understanding of how the NAR rules will play out. The election and the drop in mortgage rates are also delaying buyers. A lot of them are waiting on the sidelines until November, hoping to get a lower rate and maybe more homes to choose from. So if you are a home buyer hoping to get a lower rate, it is really hard to know where rates are headed, at when all of this kind of shakes out, right? So we know that they've been coming down. We know that it's likely they could go down a little bit more, but the Fed is going to cut the federal funds rate in September. The question is it going to be 25 basis points or 50 basis points? At this point, 25 basis points is pretty much already priced into the mortgage market. Like that's not, if they cut 25 basis points in September, you're not going to see a big change in mortgage rates that day. If you're waiting for that, don't, because that's not going to affect it very much. Now, if the Fed does decide to do 50 or even more, or says something that, is kind of related to easing even more on their policy as we continue through the year, then yes, rates may react and come down even further. But very hard to know for sure. So as I always say, if you are in a financial position to afford a house right now and you're looking to buy something long term, I don't see any reason to try to gamble with where the market's heading, because as much as you think it could go down, it could also go back up. So to each their own, but I think you got to make that decision based on your own personal situation. So Zillow is actually downgrading their housing forecast. Zillow home value and home sales forecast for July. They expect home values to climb 1.8% this year, which is a decrease from last month's projection of 2%. They anticipate 4.1 million home sales for 2024, which is 1% more than last year, but lower than their previous forecast of 4.2 million home sales. So now that we are getting into September, Zillow is saying Okay, I think there's actually going to be a smaller increase in home values and fewer home sales this year. So far this year, sales have remained lower than the flow of homes coming on the market. As of July, inventory was 25% higher compared to a year ago. Looking beyond 2024, easing inflation and more accommodating mortgage rates should improve affordability. This would help stimulate housing activity with new listings. Yada, yada, yada. So Zillow is not too confident in the housing market for the rest of the year. Nothing too drastic, but they are downgrading their forecast. Now let's talk about housing inventory and mortgage rates. This is saying housing inventory falls as mortgage rates drop, which is really not what you want to see when you are thinking about getting into the market. You don't want to see the inventory going down when you can finally feel like you're able to afford a little bit more with a lower rate. This is saying, have we seen the peak in housing inventory in 2024? The best part is that it's been higher mortgage rates have created this inventory buffer that we have. So if the economy gets softer and rates fall, we have many more homes to work with than we had in 2020 to 2023. This was written by Logan Mohtashami, who is a really great housing analyst and has some really excellent information out there related to the housing market, usually looking at that nationally. He says that many months ago, he talked about how the softer labor market should make mortgage rates fall, which it has. And he goes on to talk about the inventory change that we've seen. So between August 23rd to August 30th, we saw a fall in inventory. The same week last year, we actually saw a rise in inventory from 503,000 to 509,000. So a pretty big change between last year and this year. The all-time inventory bottom was in 2022 at 240,497. And the yearly inventory peak for 2024 was last week at 704,744. So he also says, for some context, active listings for this week in 2015 were 1,204,810. So I think that's really, really great information. I know that's a lot of numbers to throw at you, but especially the context saying that 9 years ago during this time, the active listings at this week was over 1 million. And today we're at 704,000. And last year around 509,000. So even though you're seeing a lot of stuff out there about inventory increasing and, we may be approaching a bubble because we're going to have such an oversupply, like we are still very, low on the supply side. And 2015 was, for the most part, a balanced market. So don't be fooled when you're hearing people talk about an oversupply or, a bunch of inventory hitting the market. That's certainly not where we're at right now. Now, I wanted to compare, of course, to what we're seeing in terms of active listings in the Phoenix area. And we are seeing a little bit of an uptick here. So I don't know if this trend will continue. This year has been not too crazy. It's just been like a slow climb. And then over the summer, we've stayed fairly stable. But the last, 4 weeks, we've started to see just a baby increase in inventory. So we'll see if these active listings continue to climb as we get into the fall. Now, I know I've talked a lot about the lock-in effect in the past, which is essentially the theory that people have such low mortgage rates that they aren't willing to sell their home and opt for a higher rate. And so even if that home no longer fits their needs or they just don't like it anymore, they are less inclined to actually sell and move on to a new home. But this article is saying 6 of every 7 people with mortgage rates have an interest rate below 6%, but the lock-in effect is starting to ease. And we've been talking about the lock-in effect for about 2 years now as rates started to go up and we were realizing, wow, there are a ton of people with really low mortgage rates, like below 4%. This is going to be hard to get the market to move again because no one's going to want to give that up. And this is saying that 86% of homeowners with mortgages have interest interest rates below 6%, which is down from 91% in 2023 and a record 93% in 2022. So it's showing that fewer homeowners have a mortgage rate below 6% now as compared to last year and the year before, meaning that those folks have probably given up their mortgage rate to make a move because they either had to or just decided it was worth it. So they're saying that this lock-in effect might be easing finally, but to get a full breakdown of where everyone falls with their mortgage rates, we still have 85% of homeowners with a mortgage rate below 6%. And then below 5%, there's about 76% of homeowners below 5. Below 4, we have 57%, and below 3%, there's 22% with a rate below that 3%. So there's still a really good number of homeowners that have these really great rates that we're not seeing today. And therefore, they're going to hang on to that with all they can unless they really need to make a move. Now, I'm asked often by people who are moving here from out of state, or maybe they're thinking of investing, of like, where are the best cities for housing growth within the Phoenix area? And this article kind of covers where we've been with a few of these cities that have grown the fastest, which I still think there is room for further growth. So I'm going to share that with you guys because I thought this was a really great breakdown. And by the way, if any of this is helpful for you, make sure to subscribe and maybe share this with someone who would find it helpful. The 10 fastest growing housing markets in Arizona, not all of these are in the Phoenix metro area, but 3 of them are. So Queen Creek comes in at number 1, and their 10-year housing stock change is up 123%. So they're looking at the housing stock in 2022, 19,777. The population in 2022 was 61,788. And then if we look over a 10-year time period, the population has increased by 128%. Because in 2013, the population density was 67,000, and in 2022, it was 153,000. So we've seen some really big growth in Queen Creek, which is not surprising at all. Buckeye is also on this list with a 72% change in their 10-year housing stock. They had a population of 13,000 in 2013 and then 24,000 in 2022. We also have Goodyear on this list. 36,189 was their housing stock in 2022. It's a 39% change over that 10-year period. There's a few other cities on here in larger areas like Tucson, Marana, those are kind of all connected to the Tucson area, Vail, and then some that were kind of surprising, like Cottonwood, Chino Valley, and then also New Kingman, Butler, Arizona, a few different places. So this is a great resource if you are trying to decide where you may want to buy in Arizona as a whole. These are some areas that have been seeing the biggest growth. Now, I said everything is going down, and that's not always a bad thing. So for sellers, I'm talking to you. We are seeing the weekly price cuts starting to go down. So sellers are taking fewer price cuts over, I would say, the last month or two, as we've started to see a decline here since July, and a fairly consistent decline. So that's nice to see. That's one of those downward trends that we do like to see if we're a seller. And unfortunately, as a buyer, you're not seeing as many price changes or price cuts per week, but it doesn't mean that sellers aren't negotiable. So it's always worth it to ask. So let's get into the Cromford Market Index. We have, this week, we're sitting at 99.3. If you're new here, this is from the Cromford Report. Any number between 90 to 110 means we're in a balanced market. Our demand is about 27% below that like normal range. And then supply is just about 26% below that normal range. So supply and demand are pretty much in line, meaning that we're in a balanced market. We haven't seen much change on this since last week. I think we were around 99.5. So very small changes there. And then let's look at the CMI by city. Even though this looks like it's not very positive. We've seen a more positive change compared to last week. We saw a 0.7% change month over month last week. Now we're seeing a 1.2% change month over month. So it has changed a little bit more in a positive direction over the last month. We're still kind of split on the number of cities that are moving in a direction favorable for sellers versus those moving in a direction favorable for buyers. So all these green arrows mean that that is good for sellers. All the red arrows mean that that is good for buyers. So those cities lost a little bit of ground in terms of the strength in their market from a seller's standpoint. We still have a few cities in buyers markets: Buckeye, Maricopa, Queen Creek, Surprise, and Goodyear. We have a few in balance, which is Tempe, Cave Creek, and Peoria. And then Gilbert all the way up to Fountain Hills are all technically in a seller's market. The Cromford Report did note that the biggest changes that we're seeing are in some of the smaller cities. So let's take a look at the contract ratio heat map. I love to see this because this really helps us get a better understanding of what's going on in different areas of the valley. Overall, we're pretty balanced and warm with this green color everywhere. There are some areas that are hot and hotter. You'll see those zip codes. A lot of the same areas we've been looking at for a while, although Chandler had been hanging in there for a bit as always having a warm or hot zip code. And now you can see that everything is in that balanced warm market in Chandler. So that has cooled off a little bit. Some areas of Mesa look like those have warmed up. And then we've got like some North Phoenix, North Glendale area, and then Tucson, some of Glendale there being a little hotter on the scale for the contract ratio. I know there's a lot of uncertainty out there in the market right now, especially with the election coming up. So if you're a seller who's been considering selling and you're not sure if this is the right time of year to do it with the election or just because it's fall, just check the description. I have a link for an instant home value, which will just give you an idea of value. And if you're a buyer, my tip for you is the best time of year to buy is always in November and December, which is coming up soon. So if you want to search our MLS for homes for sale, check the description below because we have a link there where you can do that. I'll see you guys next Tuesday on my next market update.